Yeah, of course, this is something the BOJ watches really closely. Just given those numbers there, as I said, labour cash earnings year-on-year growth of 2%, survey of 1.2%. What's your takeaway on that?
I think these are pretty good results. I mean, this means that the possibility of a March rate hike is very much tangible. I think it's going to be a very close call. This wage data is looking pretty strong. I think one figure to look at is that same sample full-time employee figure, because that's maybe the most difficult part of the labour market for wages to go up, and that's been 2% now for around about 5 months. So I think that points to a solid wage trend, and hey, this is what the Bank of Japan's been looking for, to feel reassured that we are in like a positive growth cycle where inflation is going to be positive for the economy instead of a negative, and this is the kind of thing the BOJ is looking for before it makes its rate hike decision.
Swaps markets are still undecided, but we're seeing some banks, namely MUFG, being a lot more decisive, seeing actually lift off this month, right? Why could we potentially see a surprise?
Well, I think if you're looking at swaps this morning, are suggesting over 50% chance of a March move. Of course, the banks need to be prepared for a March move. They've been wanting the end of negative rates for the whole time since 2016. So I'm not totally surprised that we have that voice out there saying it's going to come in March. They've got a kind of interest in it ending as soon as possible. I think it's going to be a close call. If you look at global situation, there's maybe a kind of feeling of a window of opportunity. We're going to have rate cuts around the world happening later in the year. So if the BOJ wants to get rid of its negative rate and possibly bump up rates to 0.25 or 0.5% this year, then there is an argument for getting on with it.
When you take a look at real cash earnings, that's still negative. So is that something that there's a risk that they could hike too soon even?
Hey, look, you know, the economy hasn't been in great shape. I mean, we've seen it's been in technical recession. Now, we are expecting revised figures next week to be a little bit more positive, because we saw that good earnings, capital spending figures out last week. But ultimately, you know, the economy is not going gangbusters here. So it's not the typical kind of environment that you would expect a bank to be raising interest rates. But I think the Bank of Japan has addressed this point by saying, hey, look, you know, we're going to get rid of the negative rate. If we did that, conditions would still be very low interest rates. I mean, we're still talking zero to begin with. This is still going to be supportive of the economy. And they said regarding the fall in real wages, they're saying, hey, as long as the trend is looking positive upward, then they can still move.